Nick had a dream, working in the tech scene, a 9 to 5, living that American dream. He walked the halls of Amazon, pleasing Jeff Bezos, but one day it ended like a punch to the nose. Fired for reasons he couldn't understand, lost in the system, just another number in the sand. But Nick was a fighter, he wouldn't back down. He packed his bags and headed out of town. Oh, Nick, the day trading cowboy, riding through the stocks, searching for joy. He left his old life, turned his back on the tech world. He's living life on the edge, taking risks with no regrets. Nick was a hard-working man in a small town with big plans.
I don't know if that song even came through. That was a goof that I did a few months ago, screwing around with the Sono, the AI sound creator or music creator. I know it's a similar software to what Eddie and the team has used in the past. So I don't know if that works. It might have been fun. It was really dumb. It's really stupid. It made me laugh. And even just playing it for you guys for tonight was kind of funny. So hopefully it came through. Welcome to Market Kickoff with Nick4ATick. I am Nick. Welcome to my new office setup. So I guess, sound good, looks good. I think my lighting's going to be weird today, guys. This is the first time I'm actually seeing it go production to YouTube literally in real time. So let's just hope there are no issues. I know we'll kind of, figure this out as we go. This is the first time I'm actually doing any sort of production in this new setup for me. So sound, everything, wires should be good for this new setup, but it might just be some growing pains here for today, for fast markets and for Coach Dakota show on Tuesday, as I'm kind of working through those kinks. But if you have never joined me on Sunday evening before, thank you for tuning in. What we do on this show is a little different than I think some of the other, after hours shows on TopstepTV. Is we focus more so on our Sunday prep. So going into the week, we recap last week. We talk about how to kind of build a plan for, from a technical perspective, from a volume profile perspective, going into the new week, of just things to look for, areas of interest, possible paths that this market could take us on. We talk about earnings, we talk about data releases, we talk about news, we talk about Fed speakers. We talk a little bit about options data and some gamma information, nothing too crazy. So we'll dive into a lot of those things here tonight. As I said, if this is your first time tuning in, thank you guys for coming and hanging out with me, taking a break from the Sunday NFL season, from the early parts of your dinner and everything else. How was everyone's week last week? Kind of an interesting trading week, if I do say so myself. We closed relatively near the highs of the previous week. Somewhat of a difficult week to trade, especially a day like Friday, given that it was options expiration. I had a good day, but I caught, the one move that was, a short off the open and then an immediate bounce, that I kind of took two quick trades and called it a day in my live account. I was not even supposed to be trading. It was one of those things, as I was literally under this desk, like wiring with zip ties and, other like sticky, like 3M type stuff to get wires to go cleanly. And I was seeing things out of the corner of my eye, unfortunately, inside of, my charting platforms, inside of TopstepX. And I just was like, I'm going to take a trade. Even though I said I wasn't going to trade anymore the rest of the week. I think after Wednesday, because I actually had a tough Wednesday. I ended up actually losing combines that I was was passing on the air on fast markets, ended up not actually flattening, taking a loss on the trade because I wasn't paying attention. And then, my week was pretty much like, hey, I need to move my office anyway. So I'm going to just hang it up and take that as a sign that I will come back to the markets the following week. But outside of the trade on Friday, I really didn't do a whole lot. So, hopefully everyone else had a safe week, had a good week, made some money. Or if you did lose some money, hopefully you stopped the bleeding. You had an okay time. You were able to kind of, you'll be able to pull yourself back up, tonight and into tomorrow's session. So let's dive in a little bit. Let's see. I'm trying to see the best way to do this. There we go. Sorry, I'm still now adjusting to the way my screens are. This is, like I said, we're going to go through some growing pains with me here. This is just a little bit different. I'm even seeing a glare in my screen with one of my lights that I don't like. So this is why we do these. This is why it's trial and error. It's going to be an adjustment for me. So I'm going to have to figure out how to not have, like, you guys can't see, but directly on this chart, like over here, like right where these candle patterns are for last week, there is a massive glare from one of my lights sitting right there. So it's a little distracting. So I'm just going to move that so I can actually see what I'm talking about on that candle pattern. But anyway, looking at last week's distribution, as I said, it looks very similar. I think we had talked about this with, it might have been NQs last week, but you have a P-shaped volume profile for last week with the point of control closing, near the highs of, last week's range. So what that tells me is there's still a lot of, buyer initiation in this auction and in this market. And, unless you've been living under a rock, if we were to just quickly zoom out here on the 4 hour, that's, going back to the August lows, that's a pretty stable uptrend, if I do say so myself. So it's hard to really want to get too bearish on any of this, regardless of what we do in the early part of this week. Even if we were to lose last week's range, I would still be very shocked to not see buyers potentially stepping in without a catalyst, right around 5,800s. That just seems to be an area of interest, and we built a ton of volume there. So we will see what happens, but it's hard to really want to fade a lot of these moves right now. And I'm guilty of it myself. Last week and going back previous weeks where I'm not necessarily trying to call top at the all-time highs, but you're just trying to find a good, decent, almost like swing trade to kind of play it off, to catch a larger sized move, if you will. But you just haven't had the opportunity. Every dip has been bought. Every previous week's point of control, we've had a good rebid opportunity going back weeks. You guys know we draw the volume profile from the previous week every Sunday. And if you were to basically go back the last few weeks, I mean, we've got like 6 weeks where you've had just everything. Looking at the previous week's volume profile, you can probably find a pretty decent spot to potentially just rebid this market. So that being said, just the first path looking at this, and keep in mind, guys, I am very much kind of still getting organized for this week after, basically spending most of yesterday continuing to kind of wire and set up lighting and everything else in this room. So this is my first pass. We're going to probably get a different look at this, tomorrow morning on Fast Markets, as I've had some more time to kind of dissect and see how we open for, Globex here in about 10 minutes. But just my first pass looking at this, I was kind of looking at, hey, where is the big round number, at least for the early part of this week? I would love to see buyers defending kind of that same spot they were defending on Friday, OPEX Friday. You had a very large, important option strike at 5850 SPX, and that correlated roughly to kind of the lows of Friday, kind of being that 86, 85s, 87s level. So looking at a pivot for this week, at least for the early part of this week, I would love to see, buyers potentially step in anywhere between 80 and, that 85 type spot. So I have a relatively couple point wide pivot, at least for the early part of these sessions. Is this weekly kickoff low? No, that's weekly kickoff high from last week, I believe. Yeah. Anyway, so kind of leaning into, that basically Friday's low to kind of act as my pivot, at least for Monday, maybe even Tuesday. It's a big round number. It's an option strike. And keep in mind with the spread, that may drop slightly. That's why I'm kind of, willing to give it down to like 80s, just because I think it's going to change. I don't remember what the spread was at Friday's close, but just, keep in mind that may act more like this. That's where I actually originally had drawn it, just knowing that the spread may change this week. Somewhere between that kind of like 87 to 80s range is what I would expect to kind of act as resistance. And like I said, just looking at kind of the volume profile, even 80s itself is basically last week's value area low. So also just from a, market generated information perspective, if we're taking the option strikes out of it, it just logically makes sense as being an area that we may find buyers defending positions, new buyers looking to initiate longs in this market, or where I could really see sellers potentially stepping on the gas pedal. And if they were to break that kind of level, where's the first place we're going to go? Well, we're going to try to short this most likely down to 60s, albeit down to probably 45s and the complete bottom side, or 50, maybe even down to 45s, which would almost like complete the entire traverse of last week's range as well, which would be another spot I'd be looking for buyers to kind of return in that 40s to 36 area, kind of that point of control from 2 weeks ago now, 2 Sundays ago, I guess. Yeah, it'd be 58.30s roughly, where it would really take a lot for me, or a catalyst or something, to get too bearish outside of just looking for that natural, call it 70, 80 point rotation back down towards some of these levels. But we just haven't seen it, guys. You haven't seen a seller be able to hold a decent short position outside of a few minutes. Even going back to what day last week did we have the larger sell? I think off the open, it might have been, was it Tuesday? We had a lot of weakness. I know the open, maybe someone in the chat can tell me exactly, but I think it got reversed pretty quickly too. So it just makes no sense outside of intraday scalps, outside of a few minutes here and there. You guys should really be looking for, a way to buy this market. And I say that until there's a catalyst, until there's some news, until there's something that's going to actually give us the seasonality, or a reason for the VIX to still be over 20. I think it actually got suppressed a little bit, went down to like 18s, I believe, on Friday. So it's just very difficult to want to be short. And I think you're just playing with fire the longer you do it, or the more, short attempts you really take. In fact, if we were to break out, now I gave you the put, or not the put side, the short side of this trade to start, or looking for the, if you're not necessarily looking to rebid off this pivot, let's say you missed that. Buyer stepped in, we passively get back up to, 59.10s. If we get above 59.15s, I think this is going to be the slow death march to 6,000, where everybody and their mother is probably looking to finally take profit, get out of Nvidia, short this market, whatever it is. It just seems very logical. If we kind of break above this, I would say, we most likely are going to go touch 6,000 this week. And there's option data, there's gamma support for that number potentially happening here. Now that we have kind of moved past, options expiration for last week, you kind of can see that unclenching of some of these resistance areas, or things like you saw on Friday, that are keeping us just basically wedged between, 2 strikes on the SPX chain. It just allows a little more of that to kind of unwind. And sometimes even after options expiration, you do get a lot of passive flows in the early part of the week that can kind of drive us up a little bit. So just know, if we start to build some momentum above this, do not try to be the first idiot to short this. You're going to get run over, because the 6,000 is just a massive psychological number. I think all the big 1,000 numbers always will be. And with options data to potentially support it, just look for something to rebid and join that party. Do not get caught with your pants down, really trying to short this, in my opinion, above, 5,900 right now. I know you've had some good attempts. I do see that with a caveat. You have seen passive sellers at last week's value area high 3 days in a row re-offering those 59.15s. What I meant by that was, if we get above last week's range, if we can really clear those 15s, that's where I would really not be looking to step in front of this to the short side. I'd be looking to potentially join that. Maybe Nick takes a breakout trade to the long side. One of the, rare occurrences that I'm actually smart enough to do that, rather than just hate watching this thing continue to march, not only to an all-time high, and more air horns. More air horns. Maybe I'll join along with it and get a few points out of it. It just seems like I can close my eyes and buy, 59.10s, let's say, or 59.05s, and watch it march another 10, 15 points higher for no reason, really, rather than trying to, re-offer in a spot, getting run over, getting stopped out. And I'm just sitting there like, if I just close my eyes and, bought the, not the all-time high, but bought in front of the liquidity that maybe is sitting above the all-time high, it's just like, there's nothing in front of it. There's no resistance. It's just going to go touch that liquidity that's sitting up there, the big offer on the order book. You can see it on Bookmap. You can see it on the DOM. So sometimes it just makes sense to do that. And I'm guilty of myself of trying to be the first idiot to short the all-time high. And I've done it. I did it in July, and I'm doing it now sometimes. So we're trying to break this habit. I'm much more likely this week to try to join the party to 5,600 to 6,000, and potentially 20,700, 21,000 on NQ, than I am to try to short this right here. I would love to see this break 59s and potentially lose part of Friday's range before I get to really looking for too much outside of a quick scalp to the short side. And Globex is open. Just reminding everybody, this is not a trading show. This is not a signals class show, anything. You're not going to see me take any trades here tonight. You may see me take some trades, who knows, on slow markets with Coach Dakota tomorrow, but I don't trade Sunday Globex. I really don't, outside of, if there's a ton of volatility, you won't find me trading it. But if you do, to each their own, man. It's just a little slippery on the NQ front, and not quite the velocity and volatility that I like to trade. So we'll see. Let's jump over to NQ. Been talking a lot about ES. NQ, it's a little different of a story if we kind of zoom out here. We talked about this the last couple weeks, and NQ has been balancing in a much wider range of about 600 points for the last couple weeks. And, once again, kind of closing near the value area high of the previous week. And if you guys remember on Sunday, we had talked about needing to kind of really clear 500s, even 600s before we could potentially go make a run towards 21,000, 20,700. Maybe go retest, like I said, 20,850, this old point of control, going back to the all-time highs in July. Oh, we did have a nice gap up. I didn't even notice that. We did gap up about 6 points. I know we don't really care about Sunday open Globex gaps, but I finally just saw that out of the corner of my eye. So yeah, for NQ, the same is true kind of what we were saying for last week. Just like ES, I don't necessarily want to try to short it in this range. I know you had passive reoffers at 600 and at 680s in the early parts of last week, but it's the same thing. The longer we kind of sit here, the longer I'm seeing NVIDIA, calls just to the moon, especially after last week's some of the semiconductors earnings. Who was it? ASML, that kind of put the fear of God into the semis market for about 5 minutes before the market said we never really cared about ASML anyway, and moved on to whose earnings? Whoever it was Tuesday. I think it was Tuesday in the overnight. I'm totally blanking, guys. It's been a long weekend for me, but you know exactly who I'm talking about. TSMC. I'm mixing up the names. TSMC was the one that blew the roof off their earnings, if I recall, and ASML freaked everyone out. Unless I have it backwards, please, someone in the chat correct me. We'll get to that anyway. But you know what I'm talking about. The logic is, I saw after that move, I think we had in the overnight on Thursday. You saw a ton of not passive flows. You saw a ton of call buying in NVIDIA as well. And order flow just continuing to support this, meteoric rise that we continue to see in the semiconductor names. So yes, thank you, chat, for keeping me sane here. Yes, it was ASML who basically just created a slowdown and put a little fear in the semis, and then TSMC just blew the roof off it, and we never really cared about any negative light or any negativity in the semiconductors at all. We just move forward. That's the way this market is, and that's why you should not try to short NQ if it pops above the 600s, in my opinion. If you see passive sellers stepping in there, you want to take a scalp, go for it. But it's the same thing. When we can just completely erase one of the larger names in the semiconductors when it has a little bit of weakness or it causes a little bit of weakness, and then we just forget about that 12 hours later, that's a pretty tough market to short. It just means that the market really is not really forward looking, and it's just operating on an instant by instant basis of, one sector in the technology space, which sucks, but that's the market we have to trade. So deal with it, get on that. I was naturally waking up pissed that I see, that type of overnight move, and, majority of it already happened. Granted, there was a nice short that I think you could have taken, and then a nice rebid too on Thursday when this was going on, but it's just obnoxious, I think, when these things happen in the overnight sometimes. And I'm sure our friends in the UK and in Europe and in Asia that are getting to trade these opportunities while, Nick and the rest of the US Topstep team here is asleep. But, it is what it is. It's the market we have to trade. So NQ, it's a bit more of a mess, in my opinion, compared to ES as far as, an opportunity to trade this. It's the same thing. If we're going to fade it, you kind of need to have sellers step in right here, right now in these kind of lower 500s. Otherwise, we may be off to the races to go test last week's high and potentially, God forbid, go hit an air horn, go to 21,000, make Nick have egg on his face when he called the highs being in the NASDAQ for 2024, and he called it in July when we made the all-time high. If that's what we have here in the coming weeks, in the election cycle and everything else going on, then so be it. But it's very hard to, not want to get long if we can get above like 50, 530s, 540s. I think 530s was a very important level last week. 480s was another level that I was using last week, which might have been, yeah, I guess it is this longer time frame, like value area high here. Sorry, I got dogs fighting like right behind me for some reason right now. I need to kick you guys out of this room. So yeah, what we're going to be looking for is NQ. Like I said, if we can get above, start to build volume above 530s, I am really looking for this to potentially go retest last week's highs, those 20,700s, and God forbid, like I said, all the way to almost 21,000, the 20,850s, this old point of control. And then we see, are there passive sellers kind of stepping in there? Is that kind of where everyone takes profit? Or is everyone waiting for the NASDAQ to catch up to the Dow and the S&P, hit its air horn, and then, then gold, gold, the S&P, the Dow, the NASDAQ, everything is just screaming to the north side, and, nothing makes sense. And we just continue to grind to, NQ 40,000 over the next year and a half, for all I know. Totally kidding. But that's just the market we have to trade. If we were to look on the short side, we're back to kind of this more tight balance area that we were in for weeks, where I think I was talking about this on Sunday, where if you kind of see, passive sellers stepping back in under 500s, like I said, I liked using that 480s as an important spot towards the latter half of last week. This week, I would probably say 400s is probably a better bet, maybe even 415s, even you could say last week's point of control. It's a pretty tough area, to be honest. And if we were to lose that 400 spot, it's a logical place that we could go lower, go to the 200s, maybe even all the way down to that old pivot we had before, kind of that 20,000, 60s, 50s, 20,100 spot. It's like anything else. You just got to be watching the semis. You got to be watching Tesla this week, who reports earnings. It's these things that can kind of just, you need something to kind of maybe push us down the elevator shaft a little bit. But I didn't see it. I just see more call buying in NVIDIA. I just see everybody's continuing to try to, move the semiconductors up. Everything is just passively bid in tech, it seems. And they rotate out day by day, which one is up 4%, 3%. It just is kind of the way it's been trading of late. So like I said, for me, until we get under 400, it's hard to just, outside, like I said, as I always say, intraday scalps, little 20, 30 point shorts on the NASDAQ. To look for that larger rotation trade, you need this kind of back towards the lower half of last week's range before I'd really be looking to short it personally. Hang on one second. My co-hosts here are going to get removed from this room. No longer. Now that I can kick them out of my office, I will. They're not going to be allowed up here anymore because I have two golden retriever litter mates, so they are actually brothers from the same litter, and they fight like siblings sometimes for fun, but this is what they do, and it's their dinner time, so naturally they're just going to be crazy. Anyway, let's jump over to GC. And what a move last week we had out of that 2650 spot, which I think we were talking about last Sunday as being a great place to potentially take a stab at trying to long this. I probably wouldn't have, just because we didn't quite get down there. And, even in the early part of this week, you thought maybe we'd go rotate lower. But if you got long at any point in the last week in GC, you're feeling pretty good about it, to be honest. And if you guys remember, if you've been continuing to watch my show, I'm pretty bullish gold. I expect us to be at 3,000 at some point in the first half of next year, maybe even the first quarter. We'll see. I think part of that would take the recession trade to really be in full swing and people actually, be buying more hard assets and betting on the rise in some of these assets like gold. And so we saw another move like this in silver too, which was interesting. I don't trade silver. I really don't trade the metals very much at all, but it is interesting to kind of see them continue to be on this meteoric rise that I think Dakota and I were talking about long ago. It feels like long ago at this point when we were finally breaking, the kind of that 2480 spot. I think when we were doing the TopstepTV takeover during their offsite, and we finally got that breakout to 2,500. But I think the two of us were talking about 2,700 ever since then. So naturally we broke that, and now we're going to be talking about 2,800. No. What I'd be looking for in GC, just like I said, I probably am not going to be the first idiot to try to ever step in front of something that's moving like this, especially given the breakout that we've had ever since we got above 25. You just need to find somewhere to passively rebid this. So you have this kind of cluster of 3 points of control from back to back to back weeks of that, 2660, 2670, 2680s type of range. So even last week's point of control is going to be, at the 90s. So do we get a passive sell? Do we get somebody finally taking profit up here? Maybe even a little higher, maybe, 2750s. You may get somebody trying to start, maybe lightening up. But the first place naturally that you might find buyers again is going to be around 2710s. Pretty much that old high, the old all-time high before we broke out. But you could find passive rebids anywhere between that kind of, what would that be? 2720s, probably 2717s down to that 2710 spot. But if we were to fall all the way back into 2600s and kind of retest this breakout, it should not shock anybody. In fact, the right long is probably closer to like 85s, 80s, kind of in this value area here. If you see buyers with some force stepping back in and not just chopping around like we did for weeks in this zone, that would be the first place to try one. Somewhere inside of 2,700 probably, just because it most likely is going to get you some excess, and at least go retest last week's point of control. Maybe even go retest that breakout area down towards that 2690 spot. So, and with that, you'd be looking to ride that all the way to the all-time highs. But if you were to lose this is where it gets a little dicey if you kind of broke down. But I don't think it's going to happen. I would expect somewhere between that 2650s and 2680 spot that you would find a very large bidder coming back into this market to continue to push us higher. But I would not be looking to long it up here at 2730s, 2740s, even if it were to get there. Look for something closer to 2700s to, step in front of this to the long side. Or if you get some weakness up here and you want to scalp this down there, just be aware that you could find passive buyers anywhere between the 20s and 10s. I would not be shocked given the thin volume that we kind of had in that breakout area. You could find somebody stepping right back in at the 12s, at the 15s, or at the 17s. So just something to keep in mind. If you're trying to short gold, Godspeed. I have no interest in taking a short. I'd be looking for something to passively buy. Just find lower prices. And then still, what is becoming my least favorite instrument to talk about and or trade or even think about looking at a chart for is going to be crude oil. Another wild week when it looked like, I think last Sunday we were talking about us maybe finally breaking out. And, we kind of had the early part of last week's range near those highs. We gapped down, fell during rollover. Or no, I guess that was rollover. Take that back. We had rollover. So that's why this looks a little weird, right? Are we on the Z contract now? I think so. I believe we had rollover because we were on the X before, if I recall. Or am I crazy? Someone please double check. I think this is right. But anyway, so that's why this might look a little weird. But looking at last week's profile, given I think rollover, we'll just have to play with that. But we are kind of opening below the last couple of weeks of points of control, and I think that 70s kind of psychological level, somewhere between 70, 50, and 70s, that has kind of been acting as support, as resistance, an area that we've continued to see buyers step in at, as well as passive sellers continue to step in at. It was rollover. Thanks, D. I know you trade crude, so at least somebody here is keeping me honest. So yes, we did have rollover in crude last week. So volume should no longer be split. Hopefully, it will be a little less choppy of a trade. Looking at that, it looked like the Z contract was pretty choppy to deal with for the end of the week. But this is the same spot that I think we talked about a few weeks ago as being an area that, you know, you could passively find some buyers continuing to step in and defend. Right down here to 67 is possible as well. You have these clusterings of multi weeks of points of control in this area. So like I said, anything for me, before I'd really want to get long in crude, I would want to see us kind of building volume back above the 70s. I'm not looking to knife catch this in this general area, just knowing that it's very possible we could fall back down towards 67s, and who knows, maybe go retest this Z contract low down here at 63s, 64s, which is kind of scary and horrifying, given everything that's going on in the world. I don't have a good read or even good feeling on which direction this goes. Naturally, with geopolitical headlines and war headlines and everything else going on in the world, and potentially, everything else that can happen in the recession trade and is inflation actually defeated? We don't know. But with all of that in mind, I'm not really looking to be the first person to catch the knife in crude. If I had to have a lean, I would be leaning bullish in this, just because why wouldn't I be trying to buy the dips in crude? It seems to work on a longer time frame. But given that we just sold off again, from that kind of 75 spot when it looked like we were going to go make a run and go back towards, I think when we were trading in the 80s in the summer, or maybe it was like June. And then it just gets absolutely rejected in those, like the 76s, 77s. I have absolutely no interest in potentially longing it here. If you were just to look at this from like a, overall technical perspective, like last week's value area low for the Z contract is going to be down here in the 68s, basically where we're opening right now. And it could possibly go down 67, 75. Yeah, I guess you would potentially look to try a stab long there. It's just a tough trade. I would be much more comfortable looking to kind of long a breakout of this consolidation from last week, because if you kind of got above, 70s, 50s, you pop and go retest some of the volume from the previous week. It's every week I look at this and I see very wide ranges. I see choppy price action. I see massive breakouts. I see very large selling periods. It's a roller coaster. I'm literally looking at this and it looks like an amusement park. So if that's your bag and you enjoy for some reason, I know I'm not on an intraday, it doesn't feel like it, but when I look at this on a longer time frame, it looks worse than NQ. I know it doesn't trade anywhere in any way close to that, but when you zoom out to, I guess, a longer time frame, it's just like there's no edge in this outside of just using volume and understanding where passive buyers, passive sellers are. It's just a tough trade, and it's been that way for months at this point. Going back to July? Yeah, I guess when we finally started getting that weakness, it's just been up, down, up, down, up, down. There's not like a solid 4-hour trend that you could really look at this and feel confident in any sort of swing trade. You really have to be, kind of looking to long it in this general area in kind of the mid to high 60s and hope that you can catch the rotation and hope, maybe there's a trip back to 80s in the future. But we just continue to see sellers stepping in those mid 70s. That 76 spot going back to July has been an area where we have seen a ton of passive sellers stepping in and pushing crude back down, which shocks me because I would have expected, with everything going on in the Middle East, that crude would be back in the 80s, but it's not. So I don't really know what to do or say about that, but that's just the market we have to trade in front of us. So as I said with crude, you may have a long here somewhere between the 68.50s down to the 67.70s, maybe that kind of, high volume edge that we see here on the right, somewhere in this pocket. So you had the lows of last week kind of down to where you get some volume here, probably in the 68.50s. That's probably a better spot to at least take a stab long. So a little bit lower than where we were opening at for Sunday Globex. But if we were to lose that, it's very possible that the next place you might find some buyers is going to be in that 67.70s, 67.80s range, and then all the way down to probably 67.50s. So Tough trade, crude. If you've been riding the crude roller coaster, D, I can see you. I know you have, and I know you love this thing. I just look at this on a 4 hour, on a 1 hour, and I'm like, this is not for me. I guess on an intraday it doesn't look as scary because you just ride the trend of whichever direction it may be going in. But this looks worse than NQ. I guess that's how I can describe it. On the longer time frame, this looks like just a hot mess. So Godspeed, crude traders. You have my support. I just won't be joining you on this roller coaster. You have to be at least 12 years. What is it like? At least like 5 feet something to ride. Anyway, trying to make a joke there. Didn't come to mind. It's been a long weekend, as I said. So let's jump back to ES and just see how, we're going here for Globex. As we said, we had a small gap up about 5 points higher than kind of where we closed on Friday. So nothing too crazy. I'm sure we'll close that gap. Just to recap, if you joined us a little late, ES pivot is going to basically be right around 58.50s SPX, which equates to roughly 58, 86, 87s, at least for the early part of this week. Sorry, I lost my train of thought there. But let's jump over to the economic calendar. It's another interesting week. There's nothing too shocking, too scary to kick off this week. Kashkari just seems to be, loving his book tour that he's on. It just seems to be something that every other day he's giving some sort of talk. But we have a few Fed speakers this week. No surprise. They love their book tour. They love their daily mouth breathing. But most of them have been relatively non-events. I mean, there hasn't been anyone that's caused too much volatility. Every dip has been bought anyway. So if there has been a large flush, it really hasn't mattered in the grand scheme of things. Let's see what else we got. We got a 20-year auction, more Fed speak, existing home sales, jobless claims on Thursday. What else is new? PMI. Chicago Fed National Activity Index. Got a 4-week bill auction. Kansas City Fed Composite. I don't even know what that one is. Got a 5-year. Yeah, so nothing too crazy. Durable goods on Friday, and everyone's favorite seizure after the opening bell, the Michigan consumer sentiment. I still to this day, I do not know why that provides the level of algo spasm that it does after the bell, but it always does. And it's really annoying. Because we get it like every other week. And anyway, it's my soapbox. I guess I'll die on. But yeah, outside of the usual gaggle of Fed speak and the usual bill auctions, there's nothing too crazy. There's nothing to, there's no gotchas. It's the usual 7:30, random data jargon that we're just going to get this week, where the market's most likely going to have a relatively bullish reaction to, unless something is very missed as far as a headline number or projection or, expectation, we just haven't really seen them. Everything has relatively been almost very much on par. And when it hasn't, we've sold off slightly and the market hasn't really given a crap and bid it up afterwards. So it's like I said, until there's a major catalyst and until something in this narrative changes, it's very hard to be short this market. And there's nothing I'm seeing outside of a shock from one of these that is wildly, misprojected, that we're not going to get it this week. So it's going to have to come from somewhere else. But we are now that the bank earnings are behind us, we are now in the full swing of earnings season. No surprise. This is a large amount of names, and we have a lot of interesting ones here. The only one that's really going to truly move the market, probably on an individual level, could be Tesla for the NASDAQ, just in the after hours. You've got ServiceNow also reporting on Thursday. So you've got some tech bellwethers, some names in the NASDAQ that, could provide some overall strength or weakness in the larger index. But outside of that, the rest of these are some larger organizations, some bellwethers. You've got 3M, you've got GM, you've got Verizon, you've got SAP, Lockheed Martin, Philip Morris, and a bunch of others that, Southwest, UPS, American, like a bunch of these that could, what they say or how they guide could be relatively important for the broader market, not necessarily just, the NASDAQ. It's one of those where, when some of these CEOs start talking about things as they project, they start seeing, recession, how they talk about the consumer for some of these, it just gets a little interesting with some of these larger, more Dow type names that a lot of are very safe names and are very good companies, good balance sheets, all of that stuff. Just what are their CEOs? What are they talking about? How are they kind of guiding on their earnings calls? And, these are some of the larger names that it's just interesting to kind of get their perspective. I don't think there's going to be necessarily any surprises. UPS could move the markets, but you do have, like I said, American and Southwest too. So we get to see how the airline industry is doing, and, us kind of gearing up into Q4 travel season. What did Q3 look like for Southwest? What did the summer travel season look like for Southwest and American? Just to kind of see, what is the state of the average consumer with kind of that ancillary spend, that travel spend, those other things are important just to get a good pulse reading on as well. But like I said, outside of Tesla, there's no one that's going to provide a crazy move likely in, the NASDAQ or the S&P outside of, potentially what they talk about or what Elon's latest thing is with Tesla. We'll have to, wait and see, but it's always an event. So, as well as the earnings call. So I'm sure we're all, looking forward to that as well. And as I said, guys, I don't know if I said it tonight. If you have questions, throw them in the chat. Andrew will grab them. We'll get to some of them at the end, towards the end of tonight's session. I'll try to get to all of them like I usually do. But yeah, please chime in if there's, things you guys are curious about with my trading, with anything I talked about on, when we were looking at Topstep X, even what we're going to go over here in a second, being some of the options stuff. I'm not an expert, but I will do my very best. So if you have questions, just throw them in the chat. All right, we're going to look at some gamma data. If you have been living under a rock or you've never seen my show, I like to use the options gamma data just to kind of guide some of my ES trades, or to understand larger institutional kind of support and resistance when it comes to the way options are somewhat positioned for the sake of a lot of other things that we're not going to get into. The larger part of this always is, or I always like to describe, just think of this as the same way you would understand and think about, large orders on the book, on the DOM that you're seeing on Bookmap, and how they can act as magnets as well as support as well as resistance. So when we had talked last Sunday, I think we had said we were starting to see a good amount of like growing gamma interest to the positive side up near 6,000 SPX. And you guys heard me screaming during my ES prep that, hey, if we get above like 59,015, it's kind of like, I don't want to step in front of this for the trip to this big round number, or the 5,900, SPX strike, like all of these different things that are kind of very much skewed to the call side. Like, look at this. Everything is skewed up here. That is why I am saying, if we start to build volume, we continue to build volume above 5,900 as ES, don't step in front of it. Join along with it, because all of the options data is supporting us continuing to drift higher. And when we zoom out to kind of the gross gamma, so incorporating, everything as a whole, like where calls and puts are both on the chain at the same time, you've got a little bit of put interest. Obviously that 5850s is going to act as resistance, but guys, look at how much, if you guys remember last week, or go back to the prep from last week, you could look at the same chart from last Sunday night. This is continuing to grow. The 6,000, SPX, gamma strike. Sorry, my brain is like working at like 30% capacity right now. It's been a very long week for me, and I'm about to be on like baby watch too, or driving to the hospital watch, labor watch, whatever you want to call it, soon in the next like week or two. Like that's where we are. So I'm doing my best here, guys. But the logic is, if you watched last Sundays, you would have seen a much smaller amount of total gamma kind of sitting at 6,000. It has grown, and so has 5,900 here. And if you were watching Friday's price action, it was just like nauseating. Like we would not move and we were just ping ponging like gamma strikes. And I know some people don't believe that. I don't necessarily want to really dig into like why or how it works sometimes, but sometimes it's as stupid as like there's a ton of, call gamma or positive gamma, not call gamma, positive gamma at, whatever it was, 5870s SPX. And there was a ton of negative gamma down at 5850s SPX. So naturally, when that happens, you have a day like Friday on options expiration day, where all we do is just ping pong between those two large strikes. And that's what we did all day Friday. And it was the most obnoxious options expiration that I've seen in recent memory. So the way to use this or way to think about this is exactly what I said. The longer we continue to stay above 5850 SPX, the more I would buy a trip to 5900 SPX as well as a trip to 6000. And I'm using SPX levels, obviously figure out the spread and you can get the rough ES number. But the longer we stay above basically Friday's low, the more I think these will have legs. And obviously we'll look at the 0 DTEs on Monday. We'll see how the longer time frame chain that we're looking at right now, how it changed. Because keep in mind, what you're looking at right now is for the data from basically Friday's close. So there's no, obviously the market's closed over the weekend. And this basically just takes out Friday's options. Fridays, because they all expired obviously on Friday at the close. So this is everything else that was left at the close. So we will dive into this again tomorrow. I want to get a good picture of what this looks like after the, about 30 minutes after the open when I'm on fast markets in the morning. So we'll take a deeper dive, but the logic is, as I will continue to reiterate, without a catalyst and without seeing sellers get us below basically Friday's lows, which is 5850s SPX, which is roughly 58, call it 5880s, because by the middle of the week, that's probably what the spread is going to be. Until we're kind of below that, it is very difficult to want to get short. And the options data supports that if you are looking at this top chart. That's my soapbox. I will get off of it. As I said, guys, I am not the best teacher when it comes to options information, options data. Hopefully this is somewhat helpful. It gives you some perspective into this. If you're very curious about gamma, if you really want to know how it works, there are better tools than this out there that can really get in the weeds. For me, it became very much like information paralysis, where it's too much data. I don't care what's happening in real time. Show me the larger time frame strikes and how they may move intraday. I'd rather look at that than every single, strike and all of this other data. Like there's some very powerful platforms out there. I just am too much of an idiot to actually understand it or care. Like I'm a short time frame trader. I'm not, especially on Topstep more than anything. I just can't think about some of these other things outside of, over the next 30 seconds, do I think NQ is going to go up or down? That's more so what's important to me with some of this data. And sometimes when we're drifting towards a large strike, I'm going to take the bet that, that we're going to continue to drift toward it. So whether that's to the short side or the long side, that is kind of how I trade with this. Is just pick on the side of momentum. That's the best thing you can do. All right. So back to ES here. Let's jump to like a 15-minute so we can actually see what is going on so far for Globex. And not a whole lot. We basically opened and we are stuck in like a 3-point range. So nothing to talk about there. Then let's get to questions. Oops, need to zoom up a little bit. Hey, Nick, can you discuss your risk management in regard to individual trades, daily, and account risk? I am guilty at times of being team DLL. There's, I think I'm very transparent about that. It's a risk I take. Sometimes I've had smaller losing days in a couple hundreds. Some days it just, I will keep doing my, hey, 3 strikes and you're out type of rule. On my best losing days, that's a rule I follow, mainly because my stop could be anywhere between 10 to 15 points on a NQ trade. Can be 10 points on an ES trade. It just depends on sizing. When I trade 3 lots on NQ, if I'm confident, I will usually stick to a 10-point stop, 12-point stop, just given the way it can range. And sometimes if I get stopped out 3 times in a row with a 10 to 15-point stop with slippage and fees, like, if I'm wrong 3 times in a row, I'm basically at a daily loss limit if I'm not already there. So that is typically my risk management. I'm not necessarily like, hey, team DLL, 1 trade, I'm out if I'm in or out. That's not the best way to do it. I try to make sure I get at least 2 at bats if I'm trading a little more size on something like ES, and leaning into some of my levels. But guys, that's the way I trade Topstep, and that's the way I'll trade it with my XFAs. That's the way I trade with my live account. My personal account's a little different because I trade a little less size at times, and I try to go a little longer time frame and try to catch a larger piece of the move. But it's the same thing in my personal accounts too. I do not like to lose any more than like, $5,000 in a futures account in a day. Usually means I'm either fighting the trend or, I'm very wrong. On a swing time frame, it's a little different. On an options trade, it's very different. But on futures at Topstep, day to day, I've never raised my daily loss limit in my live account. I think I asked for it once. I got rejected. And I never asked again. I actually think I can manage a $3,000 loss limit pretty well, to be honest. If I hit it, like I said, most of the time I should be done. Would it be nice to trade a little more size and have a little looser of risk with my live account at times? Yes, I have felt that way. But for the most part, I stick to $3,000 because it's a good number for me. It usually means I'm either not seeing the market right or I'm getting a little tilty. So that's what I do. Hey Nick, Bookmap has a lot of orders at 59.95 or 94. What do you make of this? Well, depends on how big they are. Let me see. Let me scroll up. I have got my Motive Wave pulled up for level 2, so let me see. It's a 300 lot. I wouldn't look too much into it. If it stays on all night, something to keep in mind for tomorrow. But given that we're 80 points below it, I wouldn't give it too much thought because it's only 300. If it was 2,000, that's a different story. But 300, I wouldn't pay it much mind. Nick, can you explain your visible range volume profile setup? Sure. So visible range volume profile in Topstep X just gives you basically the candlesticks that are on the screen. It'll spit out a histogram of volume for that specific time frame that you're in. So whether you zoom out to a 4-hour or you zoom in on the intraday to a 5-minute, however you trade, it'll just adjust the right. So you have a weekly, basically you could adjust this to something like this, where basically I had the last 2 weeks of volume here in 2 separate histograms. And then you have that 2-week volume profile total right here. So that's kind of the way I use it. It's just to kind of build it based on whatever you're looking at. So if I jump from time frame to time frame, I can still establish levels and look at this in different ways. And then these are my settings. I use ticks. I usually keep it about a point for ES. NQ could be a little wider, could be 5 points. Just depends on how you feel. Nick, does NQ hit an all-time high this week? I hope not, because I made the gentleman's bet with the TopsetTV audience that the highs are in for 2024 for the NASDAQ. So I'm going to stick to that, and that passive sellers are going to save my ass. We'll see. Nancy still seems like she's on the bid. Jensen's still, pushing us to all-time highs, and we'll have to see. I hope not. We'll find out. If ES does, I would not be shocked. If we go March to 6,000, NQ is going to hit an all-time high. So I'll have egg on my face. It is what it is. I'm shocked by the level of strength in this market, given the election cycle, given the Fed cutting, and anyway, we don't need to waste a bunch of time on it. I'm as shocked as anyone. I will not be shocked if we do it. I'm as shocked at that we did not even. I am shocked that the August low held for about 39 seconds. That still shocks me to this day. And the fact that we never went and retested it, and we were so fast out of that range in about 2 days. So yeah. Anyway. Nick, how many points or ticks do you use in a 3-lot MQ? I think I said this, anywhere between 10 and 15, to be honest. is typically my stop loss. It really depends on size. It depends on location. It depends on time frame. But on Topstep, in my XFAs, in my live, usually 10 points, usually 15 points. Next, you have to pay for this gamma profile. Yes. There's a ton of services out there. You could look at something like TraderAid. You could look at Spot Gamma. You could look at GexBot. There's a million providers out there. Some of them are a lot more in depth and different data that you can look at and will be full chain. So you could look at the gamma for something like NVIDIA, whatever you wanted to see. So they'll give you a lot more insight into single stocks as well. It just depends on what you trade. For me, trading the S&P, trading the NASDAQ, I don't really care about everything else because I look at option flow for the Mag 7 in different ways. I don't use gamma for it. Nick, what is your background? How did you start trading? What is your biggest lesson along your journey so far? So my background is primarily in tech. I think a lot of people know that. I worked in Mag 7 for a number of years. Did sales, did consulting, and got laid off. Passively always traded. You know, my own personal accounts, really just was like long only. Discovered futures in like 2020, 2021. Had no idea what I was doing. Made money, lost a lot more money. And then got serious, went full time after some success in like 2023. Went full time. I've been full time for about a year now. And yeah, it was about this time last year that I started really, like, things started really clicking and making a lot more sense. Biggest lesson along my journey is to take it slow and never think like you have this market or markets figured out. I think it's very important to, as a trader, like, you can have your edge, your style, your strategy, but if you are not constantly looking to improve and to learn new things or to stay in the weeds with new dynamics that are affecting the markets or the way things operate, you're doing yourself a disservice. So always have a beginner's mind is probably the best advice I can give somebody. Do not think just because you're starting to have success that, you know, that will continue in the future. You know, past performance is not indicative of future performance. So you always need to be evolving. You always need to be improving. You always need to be studying. You always need to be learning. Because I've been really like looking at charts daily, like daily for, you know, from open to close most days for about 2 years straight. And my level of knowledge has just continues to grow. And what I thought I knew in my first year of like really trading compared to what I knew in the last year of trading is night and day. So if you enjoy this, if you're making good money, if you have passion for this, continue to evolve, continue to try to learn new things, continue to surround yourself with the right type of friends, the right people that have a similar mindset or are providing you with actual, you know, value add, like value share. So you're not in this alone. So surround yourself with good people and always be learning. I think we covered this one when I went over gold. You know, look for what are your thoughts on gold after seeing all-time highs last Friday? Look for somewhere to rebid it. That's my thoughts. Don't try to long it at the all-time high. Look for somewhere back closer to 2,700 would be my read on gold. Like I said, I'm bullish all the way to 3,000. Nick, what's your average trade time, minutes or hours? Definitely minutes. I'm a pretty short time frame trader. If you've seen me on fast markets, if you've seen me on TopstepTV trades, sometimes, I mean, my trades can be 30 seconds, guys. It just really depends on the volatility in the markets. What is the best way? This is an interesting question. What is the best way to find out what kinds of trades would be better for your personality type? That's a really good question, and I don't know how to answer it. In a weird way, I don't know if it's types of trades, but I think it's more strategies that fit your learning style, if that makes any sense. Some people may understand support and resistance better through volume. Some people may understand support and resistance better through candlesticks. For example, Dakota doesn't use volume profile, but we seem to find very much similar areas of interest with that the other one finds, but he does it more so looking at clusters of candles and, you know, wicks and different things like that, where I look at it much more from a longer time frame volume profile. So you're seeing the same type of strategy, to find, areas that you can enter or, exit trades, just different levels of areas in the auction that make sense to somebody. But we're finding them two completely different ways, two different ways of, understanding market structure. So it's not necessarily the type of trades that would fit your personality types, but it's more the way you can kind of digest, learning information and how it's presented to you. It may click more effectively than a different way. So you could understand, you could be taught the same concept in the auction two different ways, and one may resonate better than the other. For example, you could read time and sales, or you could understand like something like delta by price and kind of understand what's happening in real time. Just a different way to look at the same type of information. What do pivots represent and why are they important levels? So I've been using pivots to kind of help you guys understand that this is something that I use, not necessarily to skew a bias of like, hey, if it's below this level, I'm looking to short it. It's really just an area. So it's Sunday night. Markets, we're going to go into the early part of this week. It's an area of interest for me, usually for the next session or two is kind of the way I use it. Where, how do I describe this? I'd be looking for, in this case, like looking at this box that I drew, I'd be looking for buyers to potentially step in and rebid here, or it's an area I'd be looking for sellers to start to gain control if we got momentum below it. It is not a, hey, if it gets to this area, I'm going to long it, or if it breaks 80s, I'm going to short it. That is not what this is. It is an area where I would say in the early part of this week's auction, where I would expect buyers to be in control as long as we are above this spot. And below that, I'd be looking for sellers to kind of accelerate and push us down to maybe lower prices. Somewhere between, in this case, if we were to lose 80s, I'd be looking for at least a rotation down to 58.60s, perhaps even all the way down to 58.30s. But most likely, I would expect, if we were to lose this, sellers to come in here and potentially, buyers to reinitiate at the 58.50s, 58.45 type level. So when I say pivots, it really just means it's a level, it's an area in the auction where I would expect maybe sellers come, if we were to kind of come in and get back to this area. Do they re-offer in this spot? Just like I'm saying, if we were to sell from up here at 5900s, where is an area I might think buyers could come back? That's how I kind of use pivots. Yes, it can be longs above, shorts below, or who's in control at, above this or below this. It's just a way for you to look at something like last week's volume profile, for example, and say, oh, Nick stuck it not only at a, big round number, like he was talking about SPX, but he also stuck his pivot at last week's value area low. Kind of makes sense. Be the lower part of the auction, and we're at the very bottom of last week's value. And if we were to lose that, well, we've talked about volume profile on the show before. When you kind of are in low areas of volume, price tends to gravitate towards higher areas of volume. We don't spend a ton of time in these. So that's where I'm saying I would expect sellers to try to initiate and push us down to an area of higher volume. So look here on the right. Not a lot of volume here. A ton of volume down here at the 60s. That's what I mean. Nick, did you start with your personal accounts or Topstep? My personal accounts. I had the pleasure of being so good at trading futures in the beginning that I thought I knew everything. I thought I was like, this is the easiest job in the world. This is gonna be so simple to make money. I think I threw like 10 grand in a TradeAvate account. In like 2 days, it was at 15 grand. And I was like, I am God. I know everything there is to know about trading. And then it went to zero before I knew it, maybe a week or two later. So naturally, in my journey, I reloaded my personal accounts. I continued to learn and do this, but it wasn't until I had gotten exposure to prop trading and Topstep, like right around when I got laid off, maybe even a little before it, as I was kind of trading futures, but I never really used them. I just understood what they were and what the logic was. It wasn't until I got laid off that I basically liquidated my personal accounts because there's no money coming in. And at that point, I'm like, I'm not risking any money in the markets trading. Like I have my long-term portfolios and things that are basically just long only, hold for as long as I can type things. But as far as like day trading, that money was now gone, but I still enjoyed it. And it was still for me something to do to pass the time. I was looking for looking for a new role. So Topstep at that point kind of allowed me to still gain exposure, learn this, make some passive income without putting my money at risk. Because keep in mind, I was trading anywhere between like a $10,000 to $20,000 personal account when I was first starting and learning, and was kind of keeping a balance around that. I was taking payouts for myself, but I wasn't letting the balance get too high and, potentially going on tilt and losing 50 grand in a day because I'm an idiot, especially when you don't have a job. So for me, using Topstep and continuing to kind of advance my expertise and learn futures this way was a safe way to do it when I had no other income, while I could still get payouts and do that. But my risk was capped when I didn't have a job, but it also kept me busy day in and day out to trade on Topstep. Nick, what made you move to full-time? Consistency, a cushion of money saved? Well, a little bit of everything. I started having a lot of good success. I was very comfortable with the way I traded, to be honest. And this is long before TopstepTV and, everything else. I had kind of started to make this transition without realizing I was making this transition. I pretty much, if you guys haven't heard my story, I basically had an offer. It got pulled for recession reasons, whatever BS companies like to do. And that almost like set me off to being like, I'm done with the corporate world. Like, I'm going to focus on this, because I looked at it as like, hey, what I make in trading in a good month is like, it makes this offer seem insignificant at times. So for me, it was almost like I used it. It had to put a chip on my shoulder, getting, having an offer from an organization, a very large organization, and then basically having it taken away. And you thought, I've been unemployed for 6-7 months, whatever it was at the time, and it's finally over. Like, all my hard work, all of this is done. I had that safety net back. And it was almost like when that was taken away from me, it lit a fire and pissed me off to the point that I almost doubled down in my learning and trying to master, trading as best I could as a way to survive, which is what it was doing for months for me as it was. And it was kind of that confidence boost that like, no, I've already been doing this. Like, I've been consistent enough. I've been taking payouts. I've been paying myself enough to survive this way and, not see a dip in my lifestyle. And, I'm frugal as it is, but it kind of gave me that added layer of confidence going into, a way to want to do this full time and not feel like I'm an idiot. But luckily I did this still very cautiously with my personal accounts. And I did this with Topstep. It was a way to continue to be able to trade, be able to have fun with it, pay myself, make passive income, and at the time still figure out what's next in a way, but do so in a more strategic way of like, no, I need to start now. As I was treating this as like something to pass the time as I was applying and interviewing for jobs, is like, okay, what does the full-time day-to-day of me doing trading look like? So it kind of like was that mind shift of, I need to figure out how to do this full time so that it's not a gambling addiction, as well as I am not putting too much capital at risk, and then I'm not burning myself out by staring at a screen. And luckily for me, that, I guess that it took a few months to kind of iron that stuff out. But at the same time, that's when Topstep found me, if that makes any sense. And we started talking about me coming on the show. And then naturally now that has become a great part of my week and a lot of fun. And, it's allowed me to get exposure into the community and meet people like Dakota and Jay and Rips and everyone else. And, MP and Andre, and actually have a good back and forth. And it almost is like it fills that void of for me is like a corporate structure of like, these are my, I do not work for Topstep in any capacity, but it's like, these are people that I get to interact with day in and day out. And it's almost like I get that office interaction doing the show on Fast Markets, a couple times a week, as I would, sitting at the water cooler. So that has been a very nice transition. Otherwise, if I was in a dark room just trading all day alone, I don't think I would have the level of success that I've had doing it that way. So for me, doing it in front of you guys has kept me honest, has kept me away from my worst impulses, because everyone's watching, because I like to think I'm a part of this community, and that, I'm able to kind of articulate what's going on and just trading versus just sitting in a dark hole and just throwing and pressing buttons and hoping it works out. I get to kind of learn from other people and, see other styles and even catch myself, failing at this, versus if there's no one holding me accountable because I'm trading in a dark room, I'm not really growing. But me having a bad day on TopstepTV, hitting daily loss limits live with you guys, that's very humbling. that's a good experience for a trader to then have to pick yourself back up from. Doing it in front of 6,000 people and losing $3,000 or losing 20 grand at times like Dakota and I do when we have 5 XFAs going, that's very humbling. It keeps you honest and it keeps me trying to always get better, and it keeps me from doing stupid things at times, because I could do that in my room alone if I chose. So, yep, that's kind of the logic there. I know that was a very long-winded answer. Hopefully I kind of gave you a perspective, but that's how I've thought about this. Doing the full-time thing, I do not recommend it to anybody. I would highly recommend using something like Topstep as a way to generate passive income for your full-time job. If you are fed up with the corporate world like I was, there's a time and a place to do it. You need to make sure you're thinking about it the right way. You need to make sure you have your safety net, and you need to make sure you've proven some level of profitability and that you have a rainy day. Because I can tell you guys, like, I've had months when I make zero, and I've had months I'm in large drawdowns, and it's like you have to be able to weather those storms. I was in a drawdown for the end of June and into early July, and it wasn't until we sold off from the all-time highs and I caught a good move like that first day or two that I got out of the damn drawdown. So you need to be prepared for that if you were to even, be on the cusp of even thinking about going full-time with this. So, Carl, can you repeat that? Nick, when are you picking up a team? To be honest, nobody's offered or no one's asked. I'd be open to the conversation if people actually want to learn from me outside of just this show. Something we could talk about, but nobody's actually talked to me about wanting to do that, but we shall see. But yeah, guys, I know we've gone well over my usual hour. In fact, given the week that I had, given moving offices, I didn't think this was going to go that long, to be honest. And now looking at the lighting looks a little different. We got a lot to figure out. This is going to be a week of growing pains for me in the new space. It's an adjustment. Trading in here is very different. I got one window that you guys can't see over there. And I used to have an office that basically had almost 3 walls of like open windows and like doors, so I could see like the outside and see the sunlight. So now I'm in a dark cave. So I have all of you. So please, everybody, keep me engaged and not just sitting here at this desk in this corner of this tiny room with slanted ceilings. I'm going to miss having that natural light. So I'm going to lose track of time. I'm going to need I need a clock or something in my purview, because it feels like I'm going to be in a casino where you have no idea what time it is. We'll see. I have some pictures of the in progress of this transition. My desk setup is very similar to what it was, but I'll give you guys a preview. I'm still doing wiring. This damn thing is still not. Okay, well, apparently you can't see the stream deck. I don't know why. My cameras must be zooming out black, but for some reason my shirt doesn't. Anyway, I have a stream deck. I've got some other things I still need to set up and figure out. I need to adjust cameras. We're going to see how my other camera looks for fast markets tomorrow. It's going to be chaos, but yes, I took some photos of the in process. I actually moved my entire office in basically a day and then just kind of threw it up in this room and then started figuring things out with wiring and desk setups and everything else. It was chaos. My wife was like, wait, you did that in a day? And keep in mind, I have like an L desk can go up or down, and it's got a million screws, and I have a butcher block like topper that I screwed into it. So I had to undo all of that and redo it. It's just an absolute chaos type of day. Anyway, I hope everyone enjoyed this show. To recap, for me to really want to look to, get short, I need to see ES breaking 5880s with some force, with some enthusiasm from sellers. If not, I would expect passive buyers to rebid there. Anything above 59.15, in my opinion, we are probably going to make the slow dreaded march to to 6,000 ES, SPX 6,000, whatever it's going to be. But we're going to march to a new all-time high. I do not really want to fade this above, like I said, that kind of 15, 16 spot. I would expect us to go make a new all-time high if we do. So that is the recap for the prep. Please trade safe, guys. I hope everyone has had a wonderful weekend. We're going to go absolutely crush this week. I'm confident in everybody. Hopefully you guys feel a little more prepared looking at last week's profile. You have a good idea of potentially where we may go, how we can attack this week. There's not a ton amount of gotchas this week as far as data. You've got some earnings, other things to watch out for, but
should be a pretty good week as far as trading. Hopefully we're not stuck in a terrible balance range forever, but hope you guys enjoyed the show. Go enjoy your Sunday evening. I'm going to go eat something because I am absolutely starving right now. Thank you all for tuning in, and I will see you live tomorrow morning on Fast Markets. Cheers.